Good evening and welcome to Tahir's Mortgage Coffee Talk. My name is Tahir I. Qureshi. I'm a principal broker of Canada Express Mortgage Inc., license number 132241. Tonight we're going to talk about how to avoid mortgage fraud. As you know, the mortgage business and profession is regulated in the province of Ontario. And we're going to talk about the details, how it is governed, how you are approached, and you are conducting business, as well as for registrant, as well as for the consumer. So I'm going to take you to my presentation, and then we go through line by line. So I'm going to share my screen to show you how this happens. So it's a free public education seminar, how to avoid mortgage fraud. Welcome. Mortgage brokerage are regulated in the province of Ontario. Financial Service Regulatory Authority of Ontario is a regulator that define the education program, registration and compliance program. And you can visit fsrao.ca to learn more about the program. The law that governs the mortgage business is Mortgage Brokerage, Lenders and Administrators Act 2006, MBLAA. When mortgage fraud occurs, when a borrower deliberately omit information, use misstatements or misrepresentation to obtain, purchase or fund a mortgage loan. You are buying it, you are refinancing it, or you are misrepresenting it, getting the money. So who commits the frauds? A borrower, a criminal organization, industry participant to obtain a mortgage. For example, these are mortgage agent, brokers, or lenders, or all professionals that are involved with the mortgage. A lender representative to fund a mortgage loan. For example, lender representative indulge in activities to get a mortgage if normally you cannot get a mortgage. And increase use of technology without face-to-face meeting, because technology has advanced and it's fast-paced approval process. Things are moving fast, and you don't get to see face-to-face to verify the identity of the people. So direct consequences of mortgage fraud. If you are doing a mortgage fraud as a professional who's licensed by FSRAO, non-compliance will expose you to enforcement action. Your license can be suspended or revocation at administrative monetary penalty. So you can go visit www.fsrao.ca and learn about the procedure. A borrower who misrepresent information and straw buyers, the people who are in the middle and no interest in the property, but they give their information to get the loan, and they use them to purchase this property, and they get the financing, and they're committing fraud. So borrowers who allow a property to be purchased in their name are committing mortgage fraud and will be liable for any financial shortfalls in the event of a default. You can go to the CHMAC site and you can have a more detail about this. They may also be held criminally responsible for their misrepresentation. So presenting a misinformation is a fraud. Indirect consequences of mortgage fraud. So, you know, when you people get involved who are victims of theft, can suffer significantly emotionally harm, including stress, depression, and guilt. So this is why it affects the people. Then you have a reputational. That means if you have a professional who has done an illegal act, it will damage the industry as well, because it erodes the public confidence. So fraudulent loans can be tarnish the reputation of mortgage agent and brokers. If a mortgage broker is involved or an agent, it will tarnish their reputation. And also have economic impact when you have a property that is bought in a specific geographic area, and then that property is found to be the price has been shown much higher than the market value, it really affects the neighborhood. So it's diminish the value of the property. So this is very important to be careful about it. What are the factors? First of all, as you can see from the mortgage and lender, there are so many brokerage and as well as lenders, banks are available. You have B lenders, and it's a tough competition. So everybody is trying to compete with each other. And because of this fastness, have a deadline to meet some condition in the agreement of purchase and sale, they're fast tracking it. By doing this, they are sacrificing the due diligence for a faster approval, because sometimes people need to get the approval within 48 hours or 24 hours. So when you're fast tracking it, there is an automatic system that helps the lender to gear to make sure the value is not exaggerated. But if the fast tracking it, that could be one of the factors. Losing business is also because you're competing with each other, potential for losing customers certain. That's why it's very important for every lender to expedite the approval, and the due diligence that's supposed to be done in that period may be ignored or overlooked. Certain products such as stated income, when you are submitting your income, that is often misused by consumer because they don't tell the right information or provide document, pay stubs, employment letters, or notice of assessment from CRA. So these are the things that is also important to find out to get the verification. If you are ignoring that, that could be one of the factors. Self-employed borrowers artificially inflate. Self-employed, they sometimes show a different artificially inflated income to obtain approval, or otherwise they won't qualify. Some places, as you know, the lenders will charge you 35%. You have to have a 35% income down payment in order to qualify for self-employed. But you cannot inflate the price, because your influence for the lender to approve is relying on your document. If you are misrepresenting, that is factor of fraud and get you in trouble. The type of mortgage fraud, that's very important for you. There are three categories of fraud: fraud for criminal activities, and the fraud for profit, and the fraud for shelter. These are three categories of fraud. So we're going to go through it, and I'll quickly give you an idea. Fraud for criminal activities. Mortgage fraud may be committed to further other criminal activities such as financing marijuana grow, operation drug labs, and money laundering. So criminal organizations often use straw borrowers to obtain mortgage financing. So this is to illegal activities and do the use for arranging a mortgage. And now, criminal organization. Now, a straw borrower is typically an individual who is paid to use his or her identity to obtain the mortgage financing, or who is a victim of theft identity. That means someone willingly being paid, and he's giving his or her information to get the financing, or his or her identity has been stolen. So that's fall into a straw borrower category. Money laundering is other practice where money laundering is a practice of performing a financial transaction with the intent to conceal the source of money, typically obtained through a criminal activity. So this is why it's very important to watch that. These are activities that are involved with the mortgage, getting a mortgage. Now, fraud for profit. Many crimes, organizations, and individuals commit mortgage fraud to obtain proceeds of the mortgage without the intent of repaying the loan. So that means you are trying to get the money from the lender, but you have no intention to pay back their money. So that's why you fall into fraud for profit. There are four basic type of fraud. One is called air loans. There is a value fraud. There is a title fraud, and there is a foreclosure fraud. So what is air loan? Air loan is a mortgage provided on a property that doesn't exist. So can you believe it? People have been able to arrange mortgages and then there is no property. So imagine who is involved with that. A lot of people, insider has to be part of that in order to get that loan. Professionals are involved, definitely. So value fraud is when criminal association with a dishonest appraisal appraise property value higher than it is worth it. So remember, when you are getting a mortgage for approval for your purchase price, and you get appraisal to go there and they check it out before bank lend you money, particularly when the mortgage is not secure. That means you're paying 20% and above conventional mortgage. A bank is the one taking the risk, and that's why they will ask for appraisal prior to lending the money. So that means some professional in appraisal will be a part of that. So title fraud is fraudulently transfer the title of a property. So some properties, they are, for example, the owner has paid, there is no mortgage, and they're already paid, there's no mortgage. They're more vulnerable to title fraud because property can be transferred with the association with those people who are responsible professional who transfer the title of the property. So this is very important for you to understand that. Foreclosure, in Canada, we don't do foreclosure, we do power of sale. So criminal scheme will see the homeowner sign over. So when something will happen is that some people will call you and say, listen, you are in trouble, you are in power of sale, we can help you to get the loan properly to get you out of this trouble. But what happens is when they're going through this process, helping this person, they might transfer the ownership or title of the property to their name, and maybe the current owner who defaulted on payment doesn't even know that. So that was called foreclosure or power of sale fraud. So that means you cannot realize that you are signing over the title of property without even realizing it. And that's called basically part of the mortgage of financing or helping people to get a power of sale. So this is very important that you have to consult with a professional. So fraud for profit, identity theft, this happens that your information is stolen or being used to commit fraud or theft. I have one situation where my name, identical person, live in Pickering. I never live in Pickering, and I get stopped on the road because I have a car, and my car is connected with my ID. I have to talk to MTO to remove my name, but once in a while they stop me and say, oh, you live, they verify to make sure I'm the same person. So I have to tell them my middle name because the fraudster didn't know my middle name, or there is someone with a similar name who has done the fraud with some companies. So this is very, very important to check your credit report with Equifax, TransUnion to make sure your information is protected. And protect your private information. Impersonation, a homeowner, borrower, vendor, or a purchaser can impersonate it to obtain financing for fictitious purchases in a real estate transaction. That means that somebody can say, I'm so-and-so, and they try to get the mortgage or financing in a real estate transaction. So this is for fraudster can do anything to make money, fraud for profit. So you have to be very, very careful about it. So now we talk about fraud for shelter. Fraud for shelter is one of most common forms of fraud in the mortgage industry, and an individual wishes to purchase a home in which to reside with no intent to abscond with mortgage fraud or fraudulently sell the property by misrepresenting his or her status. In most cases, this type of fraud involves inflation of the purchaser income to obtain mortgage fraud. So you're trying to get a mortgage by inflating your income. And this is where this fraud for shelter comes in, because you want to get a mortgage. And then you probably get the mortgage, resell the property and pocket the money and never pay the mortgage lender the original money that you borrowed. So this is fall into it. Borrower do not qualify based on declared income. This is very important for you. When you are asking for a mortgage or you are asking someone to inflate the price, we're going to talk about a few more things there. I'm going to tell you what are the red flags in terms of the mortgage to make sure that you are not indulging. You as a consumer are not forcing mortgage agent or paying money cash or indulging them to fabricate document. That's a criminal act. You have to be very, very careful about it. So borrower do not qualify. If you do not qualify based on your declared income, obtain the financing and either defaults on mortgage payment. Because if you do not qualify, the likelihood of you getting the mortgage, you're going to get defaults on the mortgage payment, and you will have an undue financial hardship because you did get the mortgage. You don't qualify. You are not supposed to do that. That's a part of know your client and do suitability of a product as a mortgage broker. We check that. I'm a principal broker of Canada Express Mortgage. We do all this. We want to make sure you know the product that we are offering you is suitable for you. And also we need to know about you, who you are, and your financial risk management, your affordability, and many other factors that we follow the guidelines of Financial Services Regulatory Authority of Ontario. They have given a guidelines. You can go to their website. You find that out. Everything is available. I'm going to share the website after this presentation. Now this is a fraud red flags. This is very important for you as a real estate agent or mortgage broker to refresh yourself. There are many potential warning signs for mortgage fraud. Some are obvious than others. Identity, cannot provide identity. If you have a client or buyer who is trying to get a financing or corporation and there is no identity, you can't identify them by a photo ID, or applicant are not available or never present, then that's a red flag for you. You have to think about whether you get more serious. If the person identity you can identify, but applicant is not available or never present, you really want to deal with this transaction and take a risk? Employment income. If somebody give you can verify income, employment and income verification, would you want to, or there is a discrepancy between the dates or employment letter versus income declared on tax return T4As, or from the verification with the employment, you call the employer and find out, is this true? And this is a red flag for you. Asset. Applicant state that he or she has significant income but little or no asset. So if you're showing so much income and you have no asset, that gives you a little bit red flag that, hey, what's going on here? So this is very important. Now, down payment sources other than the deposit. Where down payment is coming, because you want to make sure if it's coming as a gift from the family member and the immediate family member, or it's coming from other sources, identify them. Get evidence to support that. Get a bank statement and see how long they have this in their account. This is very important to understand and verify that. An applicant saving does not support. So if somebody says, I have so much income, and that income is not declared, and they don't have any saving, but they have an income but no saving, so that gives you a little bit red flag. How come you don't have a saving if you have so much income? And this is why you have to do more. Applicant do not use traditional banking institutions. Hey, when somebody, we all maintain bank accounts, whether it's a small bank or big bank, and we so with recognized registered credit unions, blah, blah, blah. But if they're not using conventional or traditional institution, that give you a red flag. Where is this money coming from? Who's managing the money? What is the source of money? Because there is a restriction and reporting of FinTrack. Anything over $10,000 declare, you have to know, especially cash. There's no cash transaction, so you have to document that, where deposit is coming from, how it was obtained. And this is why it's very important for you to check those out. These are all red flags. And continues, and I'm going to move the screen down. Applicant saving does not support saving. So we talk about that. Applicant do not use traditional banking. Bank statement do not reflect deposit consistent with the income. So if somebody say I have an income and he does not show the saving, that something asset appears to be out of line with the type of employment. Let's say somebody is making $30,000 and his assets are a lot more than that. And or a young person is making lots of money and education or lifestyle. If someone is not a professional who can verify income source, then you have a lifestyle. Somebody's driving a Rolls Royce, and then you say, listen, you're living in a small house, or you're trying to buy a small house, but you own a big Rolls Royce. So you give you a little bit of concern, red flags. Something is wrong here, because there not appears to be in line with the type of employment a person has. So it's very meeting location. Sometimes you go and meet people, you try to get them to come to your office. You go and see the property. Let's say somebody says, don't come to my property for evaluation. No, why not? I will just go and check the property to make sure this property is worth what that is. And contact information, sometimes they give you a third-party contact information. So you want to make sure you have the right contact information in application where you can reach out. And agreement of purchase and sale, if you are financing a deal, to make sure there is a signed purchase and sale agreement, and that is a true document. It's not overstated. It's signed by the name of the borrower, as a buyer. Sellers' names can be identified. There are listing agent or buying brokers. Their name is identified. That means each listing agent and real estate broker. Just for the record, I'm also a real estate broker record for City Pro Realty Inc. brokerage. So I can talk about real estate as well. So that means agreement is a document. Sometimes agreement requires a legal review. So if you can see inconsistency with the loan being requested, with what is included the price, name of the borrower versus the name on the agreement of purchase and sale, you can see those details, and then address of the house that you're buying. Those things give you a red flag. Credit reports, no credit history. If somebody is buying a property and no credit history, that's a red flag. So this is why it's very important for you to verify and check these things out to make sure that you're doing a due diligence, especially mortgage agent and broker and consumer. You all have to understand this is how it's to be done and verified. Meeting location repeats that, because mortgage, you are supposed, when you are financing a property and you have to contact, you will go there to the property to verify the property. And we mentioned that appraisal order by, I think it's a repeat, appraisal order by a party to the transaction. So third party, someone who is not related to there should be missing word, third party. So appraisal ordered by a third party to the transaction, not by the borrower or not by the lender. Normally, the appraisal when you are doing now is done by the lender directly. It's paid by the borrower, but it's done by the lender, because lender approves their certain appraisal companies to make sure there is a integrity in the system and a transparent, independent, and honest report. Title seller not on title. Remember I mentioned about that agreement of purchase and sale. If the title of the seller on the agreement is not on the title, on the title, how can a person can sell a property? And that's give you a red flag that the person who's selling must be on the title. And owner occupancy real estate listed on application not yet applicant is a renter. And sometimes you are doing a real estate actually rental, not the real owner, and therefore you have to check that stuff to make sure is that's the case. Now this is very serious. Fabricating paperwork. When people are reproducing or fabricating and falsifying pay stub, notice of assessment, income document, this is where you can get in big trouble. That's a criminal act. And as a consumer, you get penalties, and also as well as any criminal activities. So do not encourage or ask agent or a broker to fabricate paperwork. It does happen in the industry. And also consumers should never fabricate paperwork and give it to the mortgage agent or broker. They need to verify everything just to prevent that. But if you see a original T4 or T4As and that is submitted to CRA, and the people who are fabricating or creating things, they look alike the same, but there's always difference of fonts and different things. You have to watch that. A mortgage that is too good to be true. It's common sense, and it's too good to be true. And there gotta be some challenge there. Lack of communication. When you have somebody applied for a mortgage, get approval, and you try to have a difficulty to communicate with them to get approval and get more information. Lack of disclosure. Sometimes you don't disclose if it's a mortgage agent or a consumer who has a license, or he or she is related to the mortgage agent who's securing a mortgage. So there is a disclosure requirement. And this is very important. No lender commitment letter with the conditions. If you have you bought a house and no lender commitment letter with the conditions, so you don't have a commitment letters, and a mortgage has been arranged, so it needs to be verified. Where is the commitment letter from the bank? The money is sitting there. So something is happening place. It happened in sometimes the private deals as well, or flipping of the transaction. So this is very important. Idea is to think about it and see what cash fee. Sometimes you pay cash fee. A consumer pay cash fee to get a mortgage because they're emotionally attached with the property. They love the property, but they cannot get a mortgage. So they pay cash to people to get the mortgage. And they create the false, fabricate those paperwork to get a mortgage. That is very serious crime. Don't pay, because all payment that is come through, payment has to be paid to the brokerage. And there are different practices. I think banks don't charge the fees, but if you are licensed with the Financial Services Regulatory Authority of Ontario, we are not supposed to charge fees. But if I think it's over 400,000, there is a fee. Normally people don't charge because mortgage brokers are paid for residential mortgage, paid by the lenders. So this is why no cash upfront payment. Sometimes they give upfront payment to get showing his strength. But how many people pay up for upfront money? That's why it's very important. Verbal mortgage application. Why somebody calls you say, can you get me a mortgage, without submitting a proper application, which requires income statement, your asset, your liabilities, your loan for the students, or the car payments and credit cards, and if you're giving consent to the lender, agent, or broker to get your credit bureau to verify the information you have given to the person. So no to verbal mortgage application that give you basically a warning something is not right. And not receiving documents when you ask them to submit the documents and they're not giving you proper document, and you abandon them. And if you don't, you just say, sorry, I can't help you, pass on to, it's not worth taking the risk. So pressure to sign a contract and waiving the cooling off period. For example, you're buying a property and waiving the condition without arranging a mortgage. How can you do that? Sometimes where the lawyer has to review certain documents, especially new construction or assignment contracts for new construction, or you have a complicated transaction where you have asked a lawyer review of the agreement of purchase and sale. Please make sure, check on those things. If something is not being done, that means that's a red flag. So here's where to report fraud. As I mentioned to you, Financial Services, the Regulatory Authority of Ontario, has a protocol. You go there online, submit your request. All information is online. The website is fsrao.ca, and you say, I want to complain against a agent or broker or a brokerage who is conducting or did a fraud with the consumer. You can report that. Also, Consumer Protection Agency, you notify them that there's a fraud, a report of a scam or a fraud happening to you. It's very important to report that. OPP, Ontario Provincial Police, because I live and work in Peel region. So OPP, RCMP, and then also if it's a foreign transactions where the money is coming from overseas, you don't know the source of the money, and you have a certain obligation as a mortgage agent and mortgage broker to report financial transactions, and report analysis center of Canada is called FinTrack. The website is fintra-CANAFE.gc.ca. So this is where you report them. You can just call your local police, let them know. But as you remember, I mentioned that the mortgage brokerage business is regulated in the province of Ontario and is regulated by Financial Services Regulatory Authority of Ontario. So this is very important for you to go to this site, get information. There are lots of information that you can go pick there. I think after this, I'm going to try to take you to the site so you can see the information available there. Well, thank you very much for watching this, how to avoid mortgage fraud. My name is Tahir I. Qureshi. I am a principal broker. My license number is M08002130. And I'm the principal broker of Canada Express Mortgage Inc., license number 13241. And if you are to visit our site, express-mortgage.ca, all forms, automation, guidance, protocol, understanding the mortgage, very detailed website is available. So I hope that you have some understanding how to avoid mortgage fraud and report when you discover there is a mortgage fraud. So I'm going to take you to the site for now. And so we are able to go to the sites. So here you go. We can go there. FSR site. So this is the site. See the consumer, if you are involved with insurance, cooperative corporation, credit unions, financial, and then a stock mortgage right here. So you click here. These are the enforcement and monitoring, and these are all information here. These are the reports. Mortgage fraud, understand how to recognize and report. What should I do if I was pressured into an inappropriate mortgage? What can I do if a mortgage brokerage did not provide me a cooling off period before I sign? The law requires that you have a cooling off period for 48 hours before they sign it, unless it's something urgent and you have to waive that. So it's very, very important to think about it before you do that. So can mortgage broker make me pay a fee in advance? So you can check that guidelines right on the regulator site before investing in a syndicated mortgage. So you can say, learn about mortgage, understand the risk of getting a mortgage, saving for a home, shop around for a mortgage, kind of mortgages, application process, your home buying team, using a mortgage broker agent, the mortgage contract, paying for your mortgage. So what is the mortgage agent? What is a mortgage broker? What is a mortgage brokerage? So what is a mortgage administrator? So these are the site available to you, consumers who are watching Mortgage Coffee Talk, to ask your question and contact the FISCO website and ask the information. There is a contact question. There is a contact information. So you click there. You can submit online inquiry, put your information there. And this is the address, all contact information. So I hope that today's seminar was helpful to you. If you have any questions, you can call me. I'm a principal broker of Canada Express Mortgage. My number is 905-785-9926. So again, I repeat my number. My number is 905-785-9926. My direct number is 416-451-3489. My name is Tahir Qureshi. I'm a principal broker of Canada Express Mortgage. Their website is express-mortgage.ca, and you can visit and you can learn. If you have any question, give me a call. Again, I repeat my number, 905-785-9926, or direct number 416-451-3489. Thank you for watching, and we'll get back to you